Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Tech stocks fuel gains in Asia, while gold holds a 5-day rally as traders look past the US government shutdown. Private payrolls data reinforces bets on another Fed rate cut this month. President Trump says he plans to use the shutdown to fire federal workers. This as the White House halts billions in funding for projects in Democratic states. Plus, the EU presses ahead with plans to unlock 140 billion euros of frozen Russian assets to help support Ukraine. Day two of this US government shutdown, and the market seems to be shrugging it off. It's green across the screen here. You had the S&P and the Nasdaq closing up for a fourth straight day yesterday, and futures pointing higher on both sides of the Atlantic. Flip the board over to the cross-asset picture, and we have Treasuries holding on to their gains. 4.1020 is where we are in the 10-year yield after that private payrolls data yesterday. A particular focus on the private data right now, of course, because of the US government shutdown. We're expecting a delay to the BLS numbers tomorrow, but an unexpected drop on the ADP front yesterday, reinforcing the concerns about the labour market, reinforcing the expectations of Fed cut bets to come this year. So that's the 10-year yield. 117 is where we are on euro dollar. Gold here is pretty flat, as is $3,866 a troy ounce for gold. But keep an eye on Brent. We've got an OPEC Plus meeting coming at the weekend, slightly higher at the moment on oil. But let's see how Asia markets are faring now with Winnie Xu out of Hong Kong. Winnie, what are you watching where you are?
Yeah, so overall, Asian stocks up for a fourth day today, and it's really that tech optimism showing no signs of fading. And we have that news out saying that the OpenAI is having this deal with the Korean chip makers. So we're seeing Kospi here up more than 3%, taking it to another fresh record. And also Hong Kong stocks up after it reopened from a holiday. And we are seeing, again, Alibaba leading gains here after JP Morgan raised its price target by 45%, saying that they are very upbeat around the outlook when it comes to cloud business and also the potential synergy between AI and e-commerce. Now, we take a deeper dive into what's going on in the Asia tech sector. We see that SK Hynix up some 10% and taking it to the highest since 2000. Samsung also up slightly less than 5% here, and really is that optimism because these two companies will be supplying chips to OpenAI, and it's bolstering the overall sentiment for the Asia tech sector. We also see that TSMC is rising here, and that's also, as we've heard, that Sam Altman's next stop will be Taipei. Now, take a look at what's going on in Japan. Look at the JGB futures here. We actually see that futures are erasing earlier gains, and we've got that 10-year bond auction earlier today, which saw a weaker demand compared to the previous auction. So it's really signaling how investors are still remain quite cautious ahead of the LDP's LDP's leadership election this weekend. So a bit of a cautious there, and also that expectations are rising for the Bank of Japan to raise rates this month.
All right, Winnie, thank you so much for that update on Asian markets. Winnie Xu out of Hong Kong. Now, turning to some breaking news from PAI, the European buyout firm, of course, and it is a Bloomberg scoop, she says aptly, because it's about ice cream. They're bringing in fresh capital for its ice cream deal with Nestle. It's set to value the business at 15 billion euros, including debt. They're raising 3.6 billion euros of equity for the Froneri business, and that, of course, includes Häagen-Dazs in the US. The official announcement, we are told, expected as soon as today. So we shall keep an eye on PAI and Nestle shares as well. But let's get back to the US government shutdown, because Bloomberg has learned that the White House budget director is planning to swiftly dismiss federal workers within 1 or 2 days. This comes as the Trump administration targets Senate Democratic leader Chuck Schumer and the House Democratic leader Hakeem Jeffries, both of whom, of course, represent New York in Congress, by halting $18 billion in federal funding funding for infrastructure projects in New York City. Well, joining me now for more is Bloomberg's news desk editor Jill Desis. And Jill, just talk us through the expectation of how long this shutdown is going to last, because that's really what matters to markets. Is it going to be over quickly?
Well, Lizzie, if you listen to J.D. Vance, the vice president, he says that he thinks it's going to end pretty soon. Whether that actually happens, I think, is still an open question. I mean, this really still does, Lizzie, come down to some of the same things that we were talking about just a couple of days ago before the shutdown actually took place. You've got Democrats who really want to address some concerns that they have about health care, specifically Affordable Care Act, subsidies for Affordable Care Act premiums. They're really concerned that if those subsidies aren't extended, then a bunch of people's premiums are going to go up within the next few weeks. That's something that they really do want to get addressed before they agree to a stopgap spending bill. The Republicans, though, on the other hand, are saying that we can deal with all of that after we get the stopgap measure published or passed. Remember that stopgap measure would really only keep the government in operation until about mid-November before we have to revisit all of this again. But I guess if you're a Democrat, you might not necessarily trust that the Republicans are going to pick up some of those issues that you're ultimately trying to focus on. So I think that, again, it's still kind of an open question here. The Republicans do have, I think, probably about 3 or so Democrats on their side. They need 8 in order to get something passed. But we're going to have to see whether or not they're able to get more of those Democrats on board.
So to get to that 8, Jill, how is the Trump administration pressuring the Democrats to cave? What sort of projects and jobs are at risk here?
Right. Well, Lizzie, I think what you're looking at here is, that potential, that threat for them to fire some federal workers rather than just furlough them. I'm not sure how much that's actually going to happen here. We're still kind of waiting to see what exactly that would look like. And I think Chuck Schumer, the Democrat, has said that he thinks that some of that might be, a bit of a sort of an empty threat. On the sort of project side, I think that's where things get really interesting. I mean, Trump has said pretty explicitly that he does want to target projects that Democrats favor. This is potentially an opportunity for the executive branch of the White House. So obviously the Republicans here to try to, use that as a pressure tactic. What we have seen is the idea of floating, suspension or elimination of funding for projects specifically in blue states, whether that has to do with renewables or sort of infrastructure projects, as you mentioned there. That does seem to be a tactic that the Republicans are willing to lean on here. Whether that's actually something that they execute on, I think is still, again, something that is debatable here.
All right, Bloomberg's news desk editor Jill Desis, thank you so much for that update. And let's take a closer look now at how the markets are reacting to the shutdown. We can bring in Bloomberg's Valérie Teitel. Val, what's been the market reaction so far?
Well, maybe a little bit opposite of what you'd think. We were a lot of equity market positivity in the session yesterday after the shutdown was confirmed. And it, honestly, Lizzie, was global. I had a hard time finding a stock index that wasn't at record highs this morning. On this side of the Atlantic, the FTSE 100 in the UK, Euro Stoxx 50, both closed at records yesterday. And then in the U.S., S&P 500, NASDAQ closed at records as well. The optimism obviously transferred into Asia, MSCI Asia Pacific hovering at a record closing high as we speak. Some of this is some exuberance around the AI trade, but it was also reaction to the weak ADP payroll figure out yesterday. Now, it did see a decent front-end rally, so short-term interest rates headed lower is really what boosted the equity market at the end of the session yesterday. But I want to talk about what that ADP actually showed. 70% of industries in the ADP reported negative hiring. So there was decent breadth when it comes to the weakness of the labor market in that ADP survey yesterday. Remember, we do not get the NFP on Friday, and we don't get jobless claims today because of the government shutdown. So really, that weak ADP number was what led the front-end rally yesterday. In the absence of any data, we had the biggest rally in 2-year yields in a month, Lizzie, since the September NFP print that underwhelmed markets. The other asset that continues to move higher, regardless if equities are higher or lower, is gold. The yellow metal surging again in the session yesterday, hitting another record high. It's on a 5-day winning streak. And Lizzie, this rally, really, you have to argue, is really due for a pullback at some point soon, but we're not seeing it yet.
All right, Bloomberg's Valérie Titel rallies all round. Denied her favourite jobs data tomorrow, unfortunately. But still, ADP holding up the story. Well, let's get back to Europe. European Union leaders building momentum for a plan to loan Ukraine €140 billion from immobilised Russian central bank assets. The proposal has already gained backing from several EU nations and comes as European political community leaders meet today in Copenhagen.
There's a growing consensus among us that it's not only the European taxpayers that should pay for the support to Ukraine, but that Russia has to be held accountable. Russia is the perpetrator, it has caused the damage, and it has to be held accountable. And I think we have now a sound legal way to do this.
Oliver Crook, our chief Europe correspondent, is here to set us up for this meeting. Ollie, what can we expect?
Yeah, so listen, Lizzie, yesterday was all about the EU leaders and that informal meeting, which is really laying the groundwork for that formal leader meeting at the end of this month in Brussels to basically take action on a couple of things. So really, this is a meeting that was focused mostly on Ukraine and, of course, European collective defense. On the Ukraine side of things, as we just heard from Ursula von der Leyen, it is about making progress on basically being able to tap those Russian assets. Lizzie, we've been talking about this for about 2-3 years, about a way to basically finding a way to monetize these assets. And for years, we heard from European leaders that basically it was legally impossible to do and no one wanted to do it. And then the United States stopped writing checks under Donald Trump, and then there was a fiscal strain within European governments, and suddenly now there is a pathway to touch those assets, and that is basically the consensus that is growing around the table by those European leaders in a way to monetize those Russian assets in order to send the message to Vladimir Putin that this war will go on and is funded basically for the next not 1, not 2, but maybe basically 3 years using their own assets against them. Now, there are still some people that object around the table. Of course, Hungary is one among them. The Belgians have also raised objections because they're actually the ones that hold these assets, and they want to be ensured that they are not holding the bag at the end of the day. The other side of the discussions yesterday, and they will be discussed again later today, is this collective defense of Europe, because there is the national militaries, and then there is this question of how collectively the Europeans are going to work together. And one of these issues and one of these terms that's got a lot of buzz around here is this idea of the drone wall. The drone wall has got great branding. What it is exactly is not so clear. So I asked one of the CEOs of Kongsberg, the CEO of Kongsberg, who makes a lot of this defense equipment and would be contributing to the drone wall, what it is and how it would work. Have a listen.
The drone wall is a part of a bigger air shield defense. Kongsberg are into the air shield defense. We are having our air defense systems, which is a medium range today. We are expanding that, ambition to expand that to the long range. I guess it's also quite, recent what we have seen here in Denmark and in Copenhagen. Yeah. But it's for me, it's a part of the entire air defense system.
So still a lot to be worked out in terms of the actual details, the structure, the milestones of what this defense roadmap 2030 looks like, which is this European collective defense effort. But of course, Lizzie, the sort of importance of a drone wall really being brought home in Copenhagen, where we've had all of these drones flying around the airports over the last few days. And actually the Danish government has had to ban the flying of all drones during this meeting in order to not cause havoc that we've been seeing over the last few days.
Of course, we'll keep safe. Oliver Crook out of Copenhagen with full coverage of that EPC meeting for us throughout the day. Well, here are some of the other events that are on the agenda for us. At 7 a.m. London time, we'll get Tesco's earnings. Are we going to get an upgrade to the cautious April guidance, I wonder? You've got analysts expecting solid sales but tempered profitability as Tesco really tries to stay the lowest priced full-line supermarket. Then coming up half an hour after that, we get Swiss CPI expected to have edged up to 0.3% in September. This, of course, after that SNB hold. And then later in the day, third quarter Tesla production and delivery figures. And we're going to dive into those numbers with our Global Autos editor, Craig Trudell, this morning. But you can get a roundup of the stories that you need to know to get your day going in today's edition of Daybreak, which terminal subscribers can find by going to DAYB Go on your terminal. Coming up on this programme, Arab leaders are pushing Hamas to accept Trump's plan to end the war in Gaza. This as Israel intercepts a flotilla heading towards Gaza. We'll bring you the latest from the region next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:16 a.m. here in London. And the chief executive of the London Stock Exchange says that the flagship market is not for sale, even though it could have a willing buyer in rival Euronext, as its boss told us right here on Bloomberg TV. Julia Hoggett was speaking at Bloomberg's Women, Money and Power event, and she also made the case for the UK to change its pension fund policies to better support domestic companies.
You asked about mandation. For me, it's much more about saying if you want to be designated as a default pension scheme in the UK, then you should have a globally diversified portfolio, but not necessarily index weighted, which is not diversified because that basically means 70% of your money is in the US with a declining dollar right now. And actually, say 20-25% should be invested in UK assets of whatever description you have. Now, you can then opt out as a pensioner, get your full tax credit in the non-default scheme. But if you want to be in the default scheme, and the interesting thing is we've run scenarios on this, we've actually done a survey on this, or New Financial did. The average pensioner that was surveyed thought that 41% of their pension funds' equities were invested in the UK. It's about 4. Okay? 72% wanted the government to support their pension money going to invest in the companies that were the future that their kids would be employed by, simply put. And
so again, it's the story.
It's perceived as a political risk, but perversely, we have made choices in the last 25 years to actually create incentives to subsidise the cost of capital of the S&P 500, not the cost of capital of the FTSE 350. And most countries in the world look at us sideways. So I genuinely think that the thing that I'd love to see is the confidence to make that choice, to say, yes, we want Britain to be investing in itself again. And I'll say one thing, I have heard the argument, but there's nothing to buy here. Now, you just mentioned Revolut, okay? I see a remarkable number of entrepreneurs up and down this country doing remarkable, groundbreaking things every single day, you know? And I think if you look at it, the major pension funds in Canada, in Australia, the major endowments in the US, the sovereign wealth funds, where do they set up their first office to buy assets overseas? London.
Well, look, you've talked about remarkable fintechs, including your own, and overseas interest. We had the Euronext boss on Bloomberg TV saying that he might be interested in buying the LSE. It's easy to say it on Bloomberg TV. Have you actually had a knock on your door with an offer?
It's not for sale. No, look, I'll be very clear with you. It matters to me that I run the only primary exchange in the London Stock Exchange Group. That means I'm not in the slightest bit conflicted to be the biggest possible advocate for the health of the UK equity capital markets. And I operate in a group that has a market cap bigger than Euronext does. And I've seen what's happened to other exchanges in the group, because it's quite difficult to prioritise one when you own several.
The lady's not for selling. London Stock Exchange CEO Dame Julia Hoggett speaking to me there at Bloomberg's Women, Money and Power event. And we were discussing how to revive animal spirits in these UK public markets. Well, more news on that this morning. It's reported that the government is weighing a plan to exempt shares of newly listed companies from a tax on trading. Now, this is according to the Financial Times. 2 to 3 years of relief from stamp duty for newly listed companies could be announced by the Chancellor Rachel Reeves in her budget. The tax is seen as a key drag on the City of London. Well, coming up on this programme, we'll turn our attention to the Middle East. Arab leaders pushing Hamas to accept Trump's plan to end the war in Gaza. This as Israel intercepts a flotilla heading towards Gaza, and we'll have the latest from the region next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. To the Middle East now, where Arab and Muslim national leaders are pushing Hamas to accept the Gaza plan unveiled by President Trump, saying that the need to end the fighting surpasses concern about the finer details. Let's go to Dubai now, and we can speak to Paul Wallace, Bloomberg's managing editor for Middle East and Africa. Morning, Paul. Just talk us through how the efforts to push Hamas to accept the proposal to end the war are actually going.
Hi, Lizzie. Well, it seems as if Qatari officials and those from other Middle Eastern states like Turkey and Egypt are pushing Hamas pretty hard to accept this. Clearly, the group is deliberating very carefully over the text of Trump's 20-point plan. It seems as if there are at least some issues that Hamas has, or at least it wants clarity on certain things. Qatar is keen to let the U.S. know and the rest of the world know that Hamas is at the very least taking this very seriously. Qatar's Prime Minister spoke to Donald Trump yesterday to update him on the latest. According to Trump's timeline, Hamas has until sort of Friday or Saturday, I don't think that's a hard deadline, but there or thereabouts, to come back with either an acceptance or a rejection. I think there's quite a good chance that Hamas will come back with something in the middle, something that says, look, we essentially accept it, but we want to negotiate some of the finer points. And at that stage, we'll have to see whether the U.S. and Israel say, okay, we can, we will, you know, we're happy to go back to talks, at least short-term ones, or whether they see that as a flat-out rejection that then just leads to Israel continuing with its offensive into Gaza City and the north of Gaza.
And Paul, just talk us through what we know about this boat with the activists, including Greta Thunberg, sailing towards Gaza. We know that the Israeli Navy has now intercepted 3 of the boats. What more do we know?
So at the moment, it seems as if this interception has gone off pretty smoothly as far as the Israelis are concerned, and without anything in the way of violence or casualties among anyone among the activists, who obviously include Greta Thunberg or the Israeli military. And that's, I think, how Israel would like it to stand. It's taken some of them, I believe, including Thunberg, to an Israeli port. If the same thing happens as was the case a few months ago when another Thunberg flotilla was intercepted, then they'll be held there for 24 hours and then sent back to wherever they came from or somewhere in Europe. It's a bit unclear whether all the boats have been intercepted at the moment, because this flotilla was a lot bigger than the previous one. So it's still this is kind of a developing story, but certainly no reports of anything like violence so far.
OK, Paul Wallace, thank you so much for the latest out of the Middle East. Now let's bring you some other top stories from around the world. Rescue efforts continue in the central Philippines after an earthquake that killed at least 72 people and injured nearly 300 others. The 6.9 magnitude quake struck late on Tuesday, and officials say that many victims were killed in their homes or hit by fallen debris. It's the country's deadliest quake since 2013. Elsewhere, US President Donald Trump says that he'll press Chinese President Xi Jinping to restart purchases of soybeans when the two meet at the end of next month. China hasn't bought a single soybean cargo from the harvest now underway, instead relying on Argentina and Brazil. American farmers are increasingly worried that their crops will go unpurchased this year without a trade deal with Beijing. And the US Supreme Court has refused to allow President Trump to immediately fire Fed Governor Lisa Cook while she sues to keep her job. The order, issued Wednesday, means that Cook can remain in her position at least until the justices rule after hearing arguments in the case in January. The decision deals a setback to Trump's efforts to exert more control over the central bank. Well, those are some of our top global stories that are coming up on the programme. As markets continue to price in the US shutdown, we'll get the view from Valérie Noél. That's next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Tech stocks fuel gains in Asia, while gold holds a 5-day rally as traders look past the US government shutdown. Private payrolls data reinforces bets on another Fed rate cut this month. And President Trump says that he plans to use the shutdown to fire federal workers. This as the White House halts billions in funding for projects in Democratic states. Plus, rocketing past SpaceX. Bloomberg learns that OpenAI has completed a share sale at a record $500 billion valuation, overtaking Elon Musk's company as the world's most valuable startup. Well, I mentioned the shutdown and I mentioned the Fed bets. Just take a look at how they're both impacting markets this morning. We have futures pointing higher on both sides of the Atlantic, a fourth day of gains on the S&P and Nasdaq yesterday. So really this market shrugging off the shutdown and encouraged by the ADP payrolls data. Flip the board over and you can see the impact on treasuries holding their gains still. That ADP data really buttressing what we learned from the JOLTS data on Tuesday, fueling bets on 2 Fed cuts this year, whether or not we get the BLS jobs report this week. In fact, these numbers more crucial in its absence. Euro dollar at a 117 handle, gold there steady, but of course we've had this record-beating rally the past 5 days, and oil taking a little breather from its losses ahead of the OPEC Plus meeting this weekend. $65 a barrel is where we trade on Brent. But let's get more on that scoop on tech. Bloomberg learning that the ChatGPT maker OpenAI has completed a deal which values the company at a valuation of $500 billion. It makes the company the world's most valuable startup. And for the detail, we can bring in Bloomberg's Valérie Teitel. Val, just talk us through what we know about this share sale.
Well, as you mentioned, it created a record valuation for OpenAI that was previously valued before at $300 billion, so another notch up in their valuation. But when it comes to the details of the share sale, Lizzie, it does reflect some positivity about what employees think about staying at OpenAI. OpenAI announced the secondary share offering as a way to incentivize employees to stay at OpenAI instead of going to the likes of Meta, which has really kicked off this very competitive landscape for these AI researchers. So in some way, OpenAI allowing their employees to access some liquidation kind of event for the stocks that they're sitting on is a sign that they do want to keep and retain their employees. But they did allow up to $10 billion to be sold. Employees actually only took up $6.6 billion. So that does reflect that these current employees at OpenAI have confidence in their share value. They're demonstrating that they want to stay at the company and see a long-term kind of viability. So there is some positives behind this valuation for OpenAI and their successful share sale today.
OK, so maybe another tactic in that race between Sam Altman and Mark Zuckerberg over Meta. But look, you talk about $300 billion being the previous valuation. Now we're at $500 billion. How does that stack up to the public equity market?
It's really interesting to think about it in this way. So the $300 billion valuation was at the end of March, right before the Liberation Day slide in tech stocks. But it does mark a near 70% valuation climb from March until today. I was comparing that to how NVIDIA has performed since that date in March. NVIDIA has climbed over 70%. So in some way, it's not a bombastic rise in OpenAI's valuation. And I say that because there has been a lot of exuberance about AI stocks and about OpenAI specifically. But the valuation today is really just putting it in line with the tech stocks gain since the end of March.
OK, Bloomberg's Valérie Teitel, great detail on that scoop, crucial context. We thank you so much. Now, the US shutdown means that markets are still having to contend with a lack of official economic data from the world's largest economy. The Chicago Fed President Austin Goolsbee says that this poses a problem for policymakers.
The data dogs are howling because, we're not getting our usual supply of information. I will say, I consider the Bureau of Labor Statistics job data to be the absolutely best data source on jobs and statistics in the entire world. If we aren't going to have those, it's problematic. That said, the Chicago Fed has come out with some new job market indicators, and we'll be releasing them tomorrow.
Well, we can get analysis now with Valérie Noél, head of trading over at Seas Group. And I'm pleased to say she joins me around the desk in this early hour. Thanks so much for being with us.
Oh, thank you for having me.
You've just heard there from Goolsbee. I wonder, despite the data difficulties that the Fed is going to face, are we still going to get 2 Fed cuts this year in your expectation?
I mean, the bank expectation is more 1 rate cut. because we believe that there is two camps, and you can see on the dot. There is the one who really focus on the job data, and the other camp, it's more on the inflation. And for us, we would prefer that the inflation is completely defeated. So for that, we expect only one rate cut by the end of the year.
OK. And how are you thinking about the broader market impact of the US government shutdown? Is it just noise, or is it something that we need to be really concerned about?
Yeah, well, if you look at yesterday, it's more noise because nothing happened. Yes, in average, normally the shutdown is like 8.5 days. OK, the last one was 34, 35 days. But we can see a completely quick recovery every time it's reopened. So I think for the moment, I don't know if it's only noise, but it doesn't make any impact on the global market.
But what if it is prolonged?
Well, if it's prolonged, normally, the equities should normally go deeper a little bit, and it's going to have an impact on U.S. consumer. But as we said, every time it's going open again, then the market recover quite quick.
So let's say that the Fed doesn't cut as much as the market expects. Do you still see the stock rally continuing with all the zeal as it has so far because of the AI story that we were just discussing and because of earnings as well?
Yeah, well, the market it looks very, not euphoric, but quite strength on the surface. But I think it's a very concentrated market. You know, we have only 5 companies in US who represent 20% of the equity market cap in the world. So it's very concentrated. It looks overcrowded a little bit.
Is that rational to you?
Yeah, well, it's... I always said it looks uncomfortably long, like everyone is fully invested. Everyone wish they would be invested earlier. But also, we can feel the risk outside. And so I think it's still fragile. So
yeah, well, October's usually the crash month, right? So what's the risk that triggers that crash?
Yeah, it's true that the 3 biggest crash we had was in October, but it's also October. It's months that normally S&P is up more or less 1%, 0.8%, 0.9% for the Dow Jones. So it's not as bad as what we believe, but it's the volatility months. And I think until mid-October, when the earnings is going to start, and then you're going to have a kickoff of the bank, and then maybe you're going to focus on earnings on AI, are they going to disappoint, or are they going to make us relieve? And I think that's going to be quite interesting to see.
And does the rally broaden? Does the rally broaden out?
Yeah. And that's going to, U.S. is still the leader of the world. So everyone still, all the market watch the U.S. very carefully.
But are you looking for opportunity outside of the U.S.? Europe's been in a pretty tight range, right?
Yeah. So do you see much upside here before the end of the year? I mean, Europe, it's lagging on productivity, lagging on, they got big fragmentation that we can see now. Spain, Portugal, Greece, Italy is going up, but France, it's in fiscal policy trouble. Germany, they're going to spend $1 trillion for the defense, but they're going to also lay off a lot of people, on the automobile sector. So I think Europe, it's still complicated for the Eurozone. We're quite neutral on all equities, a little bit positive, and you need to be diversified. And I think that's what your client need from you. It's to make them diversify on asset class and countries.
Well, speaking of another asset class, I'm interested that you still see even more upside for gold.
Yeah.
I've seen a note from Goldman saying that they see large upside risks to their 4,300 forecast for the end of next year because of the private interest.
Yeah.
How much further do you see gold going?
I mean, we don't have any price target, but if you see, I've seen some data. Like last month, the retail investor invests a lot, like we know. But they shift a little bit the way they used to do in the US particularly. They used to do like single IDA, the Max 7, and now they make a rotation and start to buy some ETF and some gold. And so we know that there is central bank. We know we have now the retail start to come also. And a lot of PM doesn't have a lot of allocation on gold. And I can see at the bank, and a lot of bank I know, not everyone's got even a little allocation on gold. So if everyone starts to buy 1 or 2% of the portfolio, that, normally is going to be supportive for gold.
OK, so it just takes little gains across the board to take it higher on this rally. Just finally, I know that you were at our Women, Money and Power event yesterday. Absolutely. We were talking about it in the break. Yeah. What was your main takeaway?
That there is so much skills and so many knowledge on women. And I think it was the best conference I never had in 30 years of trading. And yeah.
It's really kind of you. Thank you so much for saying so. Valérie, great to have you with us this morning.
Thank you very much.
Valérie Noél, Head of Trading over at Seas Group. Well, coming up on the programme, Tesla shares have continued to accelerate recently, but will today's third quarter sales figures prove a bump in the road? We'll bring you a preview next. This is Bloomberg. Norwegian defence giant Kongsberg says that a drone wall could be part of a bigger European defence system. This after Copenhagen became the latest EU nation to see drones in its airspace recently. And the CEO of Kongsberg spoke with Bloomberg's Oliver Crook on the sidelines of the EU Leaders Summit in Copenhagen.
I guess, everyone have seen what is going on in Ukraine these days, with the massive drone attacks. I would call it very low-cost threats. But obviously you need to defend yourself against these kind of threats, whether that is for surveillance or for attacks. I would say that the drone wall is a part of a bigger air shield defense. Kongsberg are into the air shield defense. We are having our air defense systems, which is a medium range today. We are expanding that, ambition to expand that to the long range. But we have also recently now implemented short range, which is drone detection and drone, to counter US system that we have implemented in Ukraine. We did that in 6 months together with another industrial partner, and this is something that we're also expanding on now with other industrial players. So I would say the drone, I guess it's also quite, recent what we have seen here in Denmark and in Copenhagen. Yeah. But it's for me, it's a part of the entire air defense system. It's not one system for that and another system for another thing.
And much is made about the uncompetitiveness of Europe, generally speaking. This is one of the great issues that the Commission now wants to address, or many initiatives such as this one. I'd like for you, who's actually participating as a business in trying to make Europe more competitive, what do you need to see sort of concretely? Because it sounds very abstract to many people who kind of just keep hearing about this. What do you need to see concretely to make that happen within Europe?
First and foremost, I think we really need to, less talk, more action. It means to simplify the regulations. I noticed that the president of EU called it simplification. I think we should also deregulate because it's too much regulations, which makes it very, very difficult for industry as us to jointly address the challenges that we see. So we need to put in action, the things that they have been discussing in EU for quite some time now. We need to get that effective. And then I need long-term commitment for making my business case, to making my investment. Then I need commitment from the governments, the Commission, that there is a takeoff of the build-up that we're gonna do.
Bloomberg's Oliver Crook speaking to the CEO of Kongsberg in Copenhagen, where, of course, European political community leaders are meeting today, and Ollie will have full coverage for you of that throughout the day. Well, we were hearing from Valérie Noél earlier saying that the Bloomberg Women, Money and Power event was her favourite conference in 33 years. So I thought we'd play you a little of what we heard yesterday. The most influential voices from across the global finance industry gathering for a second year. And one of the main themes throughout the day was AI.
I am incredibly optimistic about Google's position right now. This is just beginning.
I think in many respects, we're still early innings. These are questions that we get from our clients all the time.
We then have 15 different products that each reach 500 million users. There's a lot of capital that needs to go in. We estimate about $7 trillion I mean, that's a large number.
Number one, you have an investor base that is very open to want to invest here. Number two, you have, great formation of capital in the private markets and in the public markets to support this need.
A lot of money still needs to go in. It's an incredibly exciting, invigorating moment in the space, and the pace of innovation, I think, has never been more thrilling. But I think that Google has all the ingredients to succeed.
Exactly what the outcome is, I think, is still to be played out.
Guest speaking at Bloomberg's Women, Money and Power event here at Bloomberg's European headquarters in London yesterday. Now to some other top stories making news this morning. Bloomberg has learned that Apple has hit pause on a planned overhaul to its Vision Pro headset. It's said to be redirecting its resources toward developing smart glasses to rival products from Meta. Sources say that Apple had been preparing a cheaper, lighter variant of its headset for release in 2027, but that those plans have now been shelved. Elsewhere, Bloomberg has learned that Siemens is considering exiting its options for its 71% stake in medical equipment unit Healthineers. The German company is weighing distributing the shares to its investors as dividends as it explores ways to reduce a potential tax hit caused by the move. A spin-off would require shareholder approval. Stay with us. We've got plenty more for you. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Tesla shares have soared recently, climbing 33% in September alone, as investors rally around Chief Executive Elon Musk's renewed focus on the company. Now, that's drawing attention to whether key third-quarter sales figures due before the U.S. market opens today are going to be strong enough to sustain that momentum. Let's get more now with our global automotive editor, Craig Trudell. Morning, Craig. Just talk us through what we can expect from Tesla's third-quarter sales numbers today.
We can definitely expect some incremental improvement, which, off of the really weak first and second quarters of the year, sort of goes without saying. Also, the fact that the tax credits in the U.S. were phasing out, there was a real rush to try to take advantage of those before those expired at the end of September. And we saw that the market in general across the U.S., that manufacturers really saw a bump in EV sales last quarter as a result of that policy change by the Trump administration. I think the question is going to be whether or not we can actually see a year-over-year increase out of the company. I think some analysts are skeptical of that. I think just the sort of trend that we saw toward the end of the quarter, just in the last few days, was a lot of analysts coming out much more optimistic that is possible. And of course, I think we'll also be on high alert today for any indication from Musk's X feed as to sort of what the go-forward outlook is for the company, because the release that the company releases about deliveries does tend to be pretty vague and sticks just to the numbers for the quarter.
Well, yeah, the stock's been on a tear recently. How much is that actually the Musk effect?
It's a good question. I think he is still very fixated on other things and on, ranging from his other companies like XAI, his chatbot Grok, but also I think, even UK politics, right? He has assured his board that he would be unwinding or sort of stepping away from his political activities. Yes, he stepped away from the Trump administration, so there's been some movement on that front. But this is someone who, is far from kind of sticking to his knitting and getting back to cars. I think this is still someone who is very keen on artificial intelligence and is sort of keeping up with the OpenAIs and Google Geminis of the world as opposed to Ford and GM. But this is also better than where we were earlier this year when he was so close to the White House, and that was turning some consumers off.
Craig Trudell, we thank you for the update. As you say, British politics seems to be a new hobby across the pond. But what about in Washington politics? Of course, the U.S. government shutdown rumbles on, and the former U.S. Treasury Secretary and Wall Street Week contributor, Larry Summers, says that the government shutdown is all about the future of American healthcare.
This is not about some progressive plan to massively expand the availability of healthcare. This is about preserving what we have for millions of Americans. And I think it will be very dangerous if this is removed.
Former US Treasury Secretary and Wall Street Week contributor Larry Summers speaking there on the US government shutdown. Is it just noise, though, for the market? Here is how historically the market has performed around a government shutdown. Flip the board and we can see what the reaction's been so far. In fact, it seems like the market has been pretty much shrugging it off. If we flip the board, you can see the global performance here. European stocks 50 in the purple there, but everyone pointing upwards. We also got those ADP numbers yesterday. So, of course, because of the shutdown, more of a spotlight on the private data, given that we're not expecting to get the BLS numbers on time. And as you can see here, an unexpected drop in the ADP figures, confirming the story that we'd already learned from the JOLTS data, this weakness in the labour market. So reinforcing Fed bets. But can we trust this data, I hear you ask? We'll flip the board one more time, and we can see the correlation here between the NFP numbers and the ADP numbers. Maybe not on a month-on-month basis, but on a 3-month basis, they pretty much converge. So, sisters, not twins, you might say, an indication of that labour market weakness once again. Well, you can find all of these charts on your Bloomberg terminal. Bloomberg terminal users can go to GTV Go to find all of them. Set yourself up for your trading day. But coming up on Bloomberg TV, we're going to bring you a conversation with the chief executive of Goldman Sachs. Tom McKenzie is going to be sitting down with David Solomon about the impact of AI on building financial infrastructure for the future. That's coming up at 9:40 a.m. London time tomorrow. But the opening trade is coming up next. Critty, Anna and Guy will take you all the way to the cash open. So stay with us. This is Bloomberg.